3 stocks I'm buying in 2019. Got a comment in the last video from Reptile. Thank you, Reptile, for asking that question. For any of you that know, I respond to every single comment on these videos, and if I don't respond with a text, I will make a video like this answering your question. So there's lots of ways to skin a potato, right? People go out there and they analyze a stock based off of the chart patterns. That's when we get into technical analysis. So an example of someone that does technical analysis trading is like the ones that you see with a million screens up looking at what's the RSI, what's the 200 daily moving average, it's probably gonna go up, and they're on it every millisecond trading. Now I've done that before, but that takes your time nonstop. As soon as the market opens and closes, your eyes are glued watching what's going on every single millisecond, right? There's machines with algorithms dedicated to day trading and taking advantage of most people's emotions. For the general population, don't know what you're doing and you try to trade off of technical analysis, you are going to lose money, and that's why a lot of people end up going in the stock market trying to do a day trade, lose money to the machines, and start thinking, oh man, the stock market's a scam. That's because you're looking at it from a technical point trading. Investing is completely different, where we're buying companies for the long term, owning shares, and we plan to hold and make profits with these companies by doing a fundamental analysis. This is how Warren Buffett, Charlie Munger, all these big guys that invest for the long run make their money through fundamentals. You don't see Warren Buffett sitting down with a million computer screens. You see him waking up in the morning, looking at his newspaper, going to his McDonald's daily visit, getting his McDonald's, whatever meal it is. I think if the market's up, he gets a bigger meal, and if the market's down, he gets a small, humble meal.
I'll have a sausage McMuffin with egg and cheese. It's down this morning, so I think I'll pass up the 317 and go for the 295.
But either way, Warren Buffett keeps it simple with fundamental analysis, and that's what this video is going to go into. Fundamentals is when we start looking at companies' actual financial statements. We start looking at their news, their PE ratios, the book ratio, start finding their book value, market value, and start looking at stock and actually analyzing where is this going in the long term, how has their earnings been performing, things like that. So in today's video, I want to go over 3 stocks that I'm buying, which I already mentioned in the beginning. I want to show you guys like what I look for, what exactly are the reasons why I'm buying them. I'm not gonna do a full analysis on each company because this video would be hours long, and we don't need that. We just want to get to the point here. So without any more further ado, let's get into the first stock I'm buying, Facebook. Now, before you get triggered and everybody starts disliking the video because Cambridge Analytica scandal, look how low Facebook has dropped. Sure, they have security issues, and who knows if they're gonna fix it. But here's something I do know. Facebook is a giant. Their revenue has been doubling every single year. I see them growing even further now. The revenue might not double anymore, right? Because it's looking like everybody has Facebook now, or just about everyone. So you can only expect the revenue to go up so much. So they might be transitioning more from a growth company to a value company. Let's not forget, when you're buying Facebook stock, I'm not just buying Facebook.com and just looking at it like that. Facebook owns what you're probably always on your phone every day doing, Instagram. Instagram's owned by Facebook, and that's still growing. That's the #1 social media platform right now. Not only that, they own WhatsApp, the communication for everybody that's outside the United States. If you're trying to talk to someone in Germany, you're not going to send them a normal text from the US. You're going to go on WhatsApp most of the time and then message on there. So that's another big deal. Not only that, it's the big data, or data, I don't know how you say it, but that is so important. That is the future from here on out. It's information. Side tangent, 1 minute, really quick. How do you think Uber and Lyft made so much money? It's the control of information. There's someone that needs a ride. Yo, I need a ride. And then there's someone's like, I want to drive someone and give them a ride and get paid. Gets both their information, get in the app, connect them, take the money, middleman. Through information control. Same thing with Facebook. You're on Facebook liking certain pictures, sending certain messages. They're getting all this data on you. They know how old you are, where you live, what you like. There's advertisers that are like, I have everything they like, I want to sell it. Facebook, connect me to the customers, I'll pay you for creating this ad. And as time has been going on, since the previous years, ad rates have just been going up and up and up for Facebook. So they're making more and more profit because everyone's starting to realize the internet advertising is super important, and they're starting to realize as well, the big companies, that all the ads on TV aren't as effective because most people, especially people I know, don't really watch TV. They're either watching YouTube videos, or they're on Facebook watching Facebook videos, or Instagram, which is owned by Facebook, watching Instagram videos. And then sometimes you're scrolling through your Instagram, you'll see an ad, that person paid for it, for you to see that. So they're making money off that. That's a big reason why I believe in Facebook. And also, when you look at their financials, besides their revenue doubling, their PE ratio is so low right now. It's ridiculously low. It's insanely low. And enough about Facebook, let's jump into number 2. Second stock I'm buying is what you're probably watching this on right now. And if you don't have an iPhone, you're on a Samsung, what are you doing with your life? Just kidding, Samsungs are fine, but iPhones are dominating. Everybody loves the blue iMessage, right? When you text someone and it's blue, you feel good, but then you see a green message, you're like, who is this alien? I don't even want to text them anymore. I mean, Apple got really smart with how they made iMessage, because your phone service is down, but you still have Wi-Fi, you can still message someone. But on a normal Android, once the Wi-Fi is gone, there's not really a way to connect, unless you start using third-party apps like WhatsApp to message through Wi-Fi, which is owned by Facebook, our first stock. But anyway, that's a big reason why I'm buying Apple. Second reason I'm buying Apple is because their whole interface, the way they've made their company, you buy an iPhone, you're gonna automatically want an iWatch or an Apple Watch. So when you have your phone away and you're focused doing your work, you can get distracted on your watch now and get a nice text on there too. So you get your little dopamine rush, like, look at my little text on my watch, and go on. Then the MacBook Pros, the Apple TV, and then the iCloud, the storage, all that big data as well that they have. Apple Music, subscription, paying non-stop recurring payments for their Apple Music. And another thing, which I can't prove as a fact, it's probably a conspiracy theory, but I believe this is true, is if you ever noticed you're texting someone, like you're sending messages and you talk about Krispy Kreme donuts. The next day you're on Safari browsing and you see a Krispy Kreme ad. What a coincidence. You were just texting about it, or you had a phone call about something. Your texts, all the data on your phone calls even, might be listened to by someone on the other side advertising to you. I know you guys watching this have experienced that, where you started talking about something and then you saw an ad for it just shortly after. And also, when we look at their financials, their PE ratio is ridiculously low now. And back in 2018, they were above $200. Now they're in the 150s, nice sweet spot. And they have so much cash on their balance sheet. I think any competitor, any competitor that comes against Apple will get eaten up. They can just buy them out. I don't see any issues with that. I don't see Apple going anywhere in the next 5-10 years. I don't see them going down. But that's as of now. If anything changes, we don't know, right? We don't know what's gonna happen. My third pick is Alibaba. Alibaba stock. This is basically the Amazon of the rest of the world. The United States has Amazon, China has Alibaba. E-commerce, huge. We've all seen how big Amazon has gotten here. I see the same potential in Alibaba. And not only that, there's a lot of other reasons. First of all, their revenue has... They own the YouTube of China, which is called Youku. Also, they own the Twitter and Facebook of China, which is called Weibo. And last but not least, Alipay, which is basically Apple Pay of China. So I see a lot of potential in Alibaba, and I see that their stock has dropped as well from the high 200s in 2018, or the low 200s in 2018, down to like the 138s, 140s that it's at right now. And they're also closely tied with the Chinese government. And if you've noticed, especially if you live in Canada or the United States of America, there's a lot of Chinese people coming over buying all this real estate, all this land. Have you noticed that more and more Chinese are buying land? It's getting a little scary. China might take over and become #1. It might be the #1 economy in the world. Now, the only drawback with this third pick for Alibaba that I'm worried about, like 0.01%, but still worried about, is that you can't directly own the shares. When you buy it through your brokerage here in the US or Canada, you don't own the shares directly because it's part of the Chinese market. So that kind of worries me because I don't own it. I just own the right to own it. Yeah, so I just don't like that. And now let's get into the 2 stocks I am shorting. The first one being Snapchat. I am shorting Snapchat. It's been the easiest short of 2018 and will continue to get shorted in 2019. I don't believe in that company. They had a lot of potential in the beginning, and then you guys can all thank Evan Spiegel for ruining the interface. And then, yo, Snapchat, let me just destroy my interface and make Snapchat look like garbage. And Kylie Jenner sending out that tweet saying how horrible it is, and watching the stock just drop right after her tweet. And then ever since then, Instagram capitalized, took the good aspects of Snapchat, their stories, sending people video messages that only last a couple seconds and whatnot, and incorporating it to a larger social media base. Whereas on Snapchat now, like, it's just gotten so ridiculous. All of you watching, comment down below which one you use. Are you on Snapchat or Instagram more? You're probably on Instagram more. So like just that right there, and we're seeing the price decline. So yeah, I just don't believe in Snapchat. Now, when I mean short, or when I say shorting, I'm not actually shorting these companies, because in my opinion, it's way too risky to actually short something, because you have an infinite loss potential, right? Because you're borrowing shares from your broker. Let's say Snapchat, I shorted at $5 and it goes to 50 the next day for, I don't know why. I have to pay a lot more money. I will be in so much debt. I might lose my entire brokerage account and still owe money on top. It's way too risky. That's why shorting is very dangerous. What I mean by shorting is I'm just buying put options. So I'm basically betting that the price is gonna go down to a certain level. And if it does, I make my money. And if it goes even lower than what I bet on, I'm gonna make more money. But if it doesn't hit it, then I only lose what I paid for the option. Now, if you guys don't understand what options are, that's a whole separate video, but I will make a video explaining what options are, you know, really simplified version for you guys to understand. If you really wanna see that soon, comment down below options video and I'll get to it as soon as possible. And then the second stock I'm shorting is Netflix. I know Netflix, you're wondering why would you short Netflix? I believe in Netflix in the long run, but as of right now, they have like a ridiculous PE ratio of 95 and they've gone up so fast. I feel like the stock is hyperextended. In my opinion, I wouldn't buy it for the long term right now at the price that it's at. So while it's going down, I would just be buying put options, or essentially selling put options at the prices I would like to buy it at. And if it hits those puts, then I'm just forced to buy it, which I wanted to buy it anyway at the low price. And if it doesn't, I keep the credit difference. So regardless, I'll be making money on Netflix. That's a whole nother video as well. I want to talk about how you should be using put options instead of limit buys. By selling puts instead of putting in a limit buy, yeah, that would get into the whole other video. Anyway, I hope you guys enjoyed this video. If you did, leave a like. I always forget to say this in the beginning. Subscribe if you haven't already. Hit the notification bell so you know when the newest video comes out. There's always a new video at least once a week. And thank you to everybody that's already been subscribed, already commenting and liking these videos. I appreciate all of your support, and until the next one, see you guys.